NVIDIA over the weekend released the new 8K current report filing where they talk a lot about this new kind of AI regulations. Now, too long to watch if you have other things to do. There wasn't much shared in this information. It's more about what are the products that could be impacted if these regulations do go intact. The other thing is that if it goes down, it's going to go in effect on May 15th of 2025. Now, what I found pretty interesting is that the company did not mention if this was going to have any financial impact for this quarter or the rest of the year, which I thought the company would have done with something this big. Now, this could be seen as a bullish case as, hey, look, if they did not say anything, it means that there's no material impact at the moment. Obviously, this is going to be crucial during the upcoming earnings next month, but this is the main information. Now, if you enjoyed that, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a special offer at fool.com/Jose, and check out my free daily semiconductor newsletter, whatthechip.happened.com. Now, for the rest of this episode, what I want to do is take a closer look at my overall thoughts on the AI diffusion rule, which have kind of changed a bit from my previous episodes. So I want to give an update to that. Some companies that can benefit, some companies that can lose out of this, and just going to share my overall thoughts of where I've grabbed the information that I'm continuing to learn. So let's get started as we're going to get a lot more information in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Now, like I mentioned on January 17th at the intro of this episode, NVIDIA filed an 8K current report filing. In this current report filing, they did mention that if this new AI diffusion rule goes online, it's going to impact products not limited, but including the A100, the A800, the H100, H200, H800, the B100, the B200, the Grace Blackwell 200, the L4, L40S, and RTX 6000 ADA. And obviously, it could impact any future products like the upcoming Rubin and the upcoming Grace Blackwell or the Blackwell Ultra. And if the effects do continue and the upcoming Trump administration doesn't make any changes, this will go in effect in about 120 days from publication, which would be May 15th of 2025. So the company did not mention any material impact. There could be two reasons for it. First is obviously, this isn't expected to take place till 120 days from now, and the company hasn't really given us a guidance for that time frame. So there's nothing that they can say that will change. They won't say, hey, look, things will change from here on out based on the guidelines we have given you before. So the company can continue to grow, and that could still be intact. Obviously, earnings are expected in the upcoming month, but since this is 120 days away, it will definitely not impact that quarter at all. Now, one thing that could also be seen as a bullish case is it might not impact the company as a whole either. But like I said, in today's episode, I want to share my overall thoughts, and I do believe there will be some impact for NVIDIA and NVIDIA stock investors. So first, I want to kind of discuss where I got this information. So I've used AI to kind of read through this multi-100-page report. There's also a lot of information in for example, TrendForce with this article of US 3-tier AI export rules where they discuss, and there's a lot of places here at TrendForce. Then also Semi-Analysis, which is a huge semiconductor analyst group, did share some thoughts about this rule as well. So all those three things of me using AI, me reading from everything has kind of shaped my information about this versus when I did a video a few days ago. So I kind of want to share my overall thoughts here, and I did create a pretty simple presentation, hopefully. So first, let's kind of understand the point of this AI export regulations. So the main reason this has come out is because China, mainly China, and other entities seen as a threat to national security were still getting access to the H100 and other AI chips, right? Obviously, we know that the H100 couldn't be sent to China or Russia, but due to some loopholes, China customers and China entities that weren't allowed to really get access to it were still getting access to the H100. The new regulations that are created are more of a I see what you are doing with AI chip approach. So if you build big clusters, we want the United States want to ensure that it doesn't fall into the wrong hands. So, like I mentioned, even though China was not directly buying, there was still an increase in demand for AI chips from cloud providers that were willing to overlook certain things, right? So they were still providing certain computational power to China. So China was still providing this huge growth in demand, even though they weren't directly buying. Obviously, we can see with the more I'm watching what you're doing approach, it would be a lot harder for China and these entities to get access. So it will reduce the demand for H100 and some of these AI chips in certain places. And I'll talk a little bit about that. Now, kind of understanding this AI rule creates a tier 3 system. The first one is tier 1 countries, which are pretty much your good friends of us. You buy all you want, right? We're going to tell you you can buy all you want. We're still going to regulate and kind of take a closer eye on what things are happening, but you can buy all you want. Then there's tier 2 countries, and tier 2 countries are like, hey, look, we kind of trust you, so you can buy chips, but we will monitor you and we will cap you at a X amount of chips that you can buy per year. Luckily, if you are a hyperscale US company like Microsoft or Amazon or Google, and you're building a data center in these tier 2 countries, we won't bug you as much. We'll kind of give you the licensing approach. You can kind of buy pretty much as you want, except you can only build about 7% of your total compute in that selected country and about 25% in total at a tier 2 country. So let's say you only had quick math, about 100 teraflops of AI compute power. You can only do 7% or 7 teraflops in one tier 2 countries. In the whole tier 2 country list, you can only have 25%. The other 75% have to be in tier 1 countries. So this forces big tech to continue to invest in the USA. And if they want to build in tier 2 countries, it's possible for them. And if they want to build more, they just have to build more in tier 1 countries like the United States, right? So it's it seems to be a great way for the big tech players to win in these tier 2 countries. So the other thing is, I do want to mention that not necessarily too much of an impact, but research and university entities in kind of these tier 2 countries don't really count for the cap. However, small AI cloud companies in that country still count, which is going to be crucial, and I'll explain in a little bit why. Now, tier 3 countries is it's like, hey, look, we don't like you, so you're SOL, you're not going to get any AI chips from us. So how does this impact the market? Like I mentioned earlier, NVIDIA's demand should slow down in certain markets, especially those markets that were overlooking certain things. Now the question is, how much demand can be picked up by the US and big tech companies, right? This slowdown in demand can also be amplified as the H100 and H200 chips used by China will probably flood the markets in certain areas. It seems a little bit more scarier than I explained it, though. I do think we're going to get a lot of pickup by US and big tech players. I just don't believe it will be the complete pickup. Now, big tech cloud service providers can benefit as they will benefit from less competition in tier 2 countries. Like I mentioned, in tier 2 countries, small cloud service providers, it's going to be very difficult for them to buy as many GPUs, unlike the big tech players who kind of get these licensing approvals that they can build big clusters. So in theory, in tier 2 countries, big tech players are going to see less competition. Now, this can be a little bit of both good and bad for NVIDIA. And the good side is just because there's going to be less individual cloud service providers, that demand is most likely going to be picked up by the big cloud service providers, right? So they're still going to see a huge amount of AI chip demand from someone in those tier 2 countries. Now, the bearish case is if one customer is now ordering more products and there's less customers, then those big customers are going to be able to fight more on pricing, right? They're going to be like, hey, look, we're buying a lot from you. Can you even give us better pricings? The other things that I believe we'll see is China will probably buy more H20, the B20, which are lower margin products and not regulated. So this could also impact margins. Now, the final thing it can impact margins is if any big tech cloud service providers are investing too much capacity in tier 2 countries, they will either need to do the following: stop those investments or invest more in the United States to meet the capacity kind of limitations that we talked about earlier. Only 7% of total compute can be built in a tier 2 country, and only 25% of total compute can be built in total tier 2 countries as a whole. There are studies by Semi-Analysis that could impact Oracle the most, but definitely check them out for full analysis and why. But Oracle is one that could be impacted by this rule the most, as it does seem like they have a lot of capacity in some of these tier 2 countries. Now, my final thoughts on NVIDIA. So first, I do believe that this could impact margins in the long term for NVIDIA. I'm gonna say, sadly, I think margins, in my opinion, peaked at those high 70%. I could still see them being in the very low 70s or even in the extremely high 60s, which is still very, very good. But I don't believe, if you are doing any form of cash flow analysis or any form of margin prediction, that you should think about those high 77s anymore. You should start being more conservative with the low 70s and maybe the potential high 60s. Second is, as long as AI demand is strong, the company can continue to grow. But these regulations do create some impact. Maybe not as bad as it sounds or others make it sound, but in the long term, it could be the reason why NVIDIA would grow 50% in revenue instead of something like 70%. Those are just made up numbers, but it just showcases that, one, I'm still bullish on NVIDIA's revenue growth, but I do believe that it has kind of created a headwind for revenue growth, and you don't see the full extent of what they could really grow without these regulations. Third thing that I do think in my thoughts on NVIDIA is, previously I thought that the Trump administration would push back on this or kind of reverse this. I am less hopeful of that happening, because the more I read it, it does seem like it does create a winning approach for a lot of cloud server providers and big tech, which are all US based companies: Google, Microsoft, and Amazon. Plus, it also creates kind of a US safe AI approach. So in previous episodes, I thought that the Trump administration might most likely cancel it. And obviously that could still happen. I could just be wrong, or they might make some fine tunes to it. But it does seem like, based on US and America being first, this is something that will most likely stick. Now, originally, there was. I also discussed that Microsoft made a point that made it seem like companies would go to outside USA infrastructure to build AI infrastructure. But now, more I think about it, I don't believe that's the case, as there is no real replacement to NVIDIA's chips right now. So I think there is some takeaways here. I think maybe NVIDIA won't be a huge grower, but will still be a huge grower, right? It does impact their growth a bit, but not as scary as many other people might make it seem, even if the regulations don't get canceled, right? And the reason I also want to explain that is, just in case the regulations don't get, or these export restrictions don't get removed by the upcoming Trump administration, it is important to understand that it's not necessarily a complete red flag or a complete sell the news event. So I just wanted to kind of be ahead of that if things like that don't happen. Now, the other thing that I think NVIDIA might be ahead of the game. About a few months ago, on October of 2024, NVIDIA was reportedly co-developing custom chips tailored for India with Indian partners. So originally, I'm like, hey, why would NVIDIA want to enter the ASIC market? But now with regulations like this, I could actually see a world where NVIDIA creates ASIC solutions not for individual big tech, but for individual countries, to help eliminate kind of these restriction laws one way or another. So this is going to be very crucial in my opinion, and it's going to be something I'm going to be following suit. Again, as an NVIDIA stock investor, it's not something that would worry me right now, but it is something that I keep a closer eye on. Another thing is, if the new administration doesn't eliminate these regulations, it's not something that I would be completely bearish on NVIDIA either, right? It does seem like NVIDIA will be okay, they might just not grow as fast. They will still grow quickly, but not as fast as previously intended. And all this can change dramatically, right? If AI development continues to grow at a rapid pace and we get to see new AI markets, things like the robotics industry, if all those things start to take place, then maybe things like this become even obsolete as there's growth potential in other avenues. So I hope you guys enjoyed today's episode. I hope I provided some information. Take care, have a good day, and see you all next time.